time for Licking on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Licking on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. Now here's your host of Licking on Lending, David Lickin.
Let's begin.
Folks, I'm excited to have Drey Roberts, a legend in the warehouse lending space. He's very knowledgeable. One of the things I like about Drey, listeners, is he's so humble. So, Drey, we're excited to have you joining us. Thank you for being here, sir.
It is absolutely my honor. Thank you so much for having me, David.
You bet. So for those that do not know you, give us a little bit of your background and tell us a little bit about how you got to where you're at today.
Well, I've been in the industry for 22 years, a little over 22 years. Started my career at Countrywide Home Loans, originating loans. Did that for a couple of years and then spent the next 15 years or so in the correspondent wholesale emerging correspondent space, much of it at Flagstar Bank, transitioned over to the warehouse side. And I have been in the warehouse side for almost 10 years. I was doing the math this morning. I was like, wow, that's gone by faster than I thought, so.
Yeah. Well, it's outstanding. And tell us a little bit about Independent, the bank you're with, and, a little bit of the scope and the size of the reach of the bank.
So the bank is a bank that its footprint lies in Texas and in Colorado. It's a $20 billion bank. It trades under the stock symbol IBTX. We're kind of a bank that deals with multiple things, more of an acquisitions bank, and that's kind of perpetuated our growth. Our warehouse lending division was part of an acquisition of North Star Bank back in 2017. We're proud of the fact that Forbes ranked us the number 6 best bank in the nation in 2021, based on real metrics, not on just how much we advertise with them or anything of that nature. So,
well, great banks hire great people, and you're one of them, and we're thrilled to have you here, Drey. And I think what we need to get into is talking about warehouse lending. I want to say a special shout out to Jim Harrison, who has been a big fan and a listener of the podcast, as you are, Drey. But I want to give him a real shout out, and I want to get into talking about your role as you see it as a warehouse lender.
So warehouse lending is kind of interesting. It changes, as the market changes. 2 years ago, I was telling people, 2.5 years ago in 2021, I was telling people, retain as much liquidity, as much net worth as you can, because we're about to get really busy and you're about to need as much warehouse capacity as you could possibly get. And I really didn't even fully understand the scope of what I was saying.
That was what you were saying then, yeah.
Right. But it was definitely like, hey, you're going to get big, you're going to get busy. Save your money so we can expand your warehouse line, because your warehouse line is based on the net worth of the company and a leverage ratio that we use to calculate that. But it's much more than just the guy with the money. Right now we're on the opposite side of that. We're trying to help our clients understand what they can do to make their business run more efficiently, operate in the new environment that we're in. I think for us, we've done a really good job of bringing people, because we've been in a growth mode for so long, and we want to continue to grow. But we've been in a growth mode, and we've brought on some really specialized people that are kind of best in class in what they do. I've got people that have worked in the emerging correspondent space, the correspondent space. I've got a young man. He is, I say young man, but he's worked in the secondary market area for most of his career. He understands hedging. He understands MSRs. He understands all of that. I've got somebody who's worked in credit for close to 20 years and understands accounting very well. I've got a young man who started with me, and he made it his goal to understand, to be omnipotent when it comes to MSR financing. I've got an operations manager who understands the whole back end, understands the complete, but ultimately knowing all of that. And we have a leader that we report to, James Hinton, who has been in the industry for 55 years and is truly probably the most knowledgeable person that you can imagine. He really knows everything. He truly is a legend and a wonderful teacher as well. And we've got partners. We've got people like yourself at Transformational Mortgage Solutions that we are in constant contact with, that have so much knowledge and are able to help me help my clients. And obviously you're able to help people directly as well. So but the point of that is it's important to have a relationship with your warehouse lender, be in communication, understand that we are here to help in the good times and the bad times. So,
we've certainly gone through some recently very, very good times, unprecedented good times. It seems like we went right off the cliff into some of the most unprecedented, most difficult times. Do your clients feel trepidation to reach out when things are as difficult as they are right now?
So that's a great question. Some of them do absolutely feel trepidation. Some of them are very quick to reach out because, we've tried to tell everybody, make your first phone call, your warehouse line when you have problems, when you have a loan that's unsellable or you're not going to be able to meet your covenants, call us first. Let's see if we can work something out. But some of them, it's hard to do. I had a phone call the other day from a mid-sized client, and he's like, the first words out of his mouth were, "Drey, please talk me off the ledge." And so we started talking about, he goes, I just had my first loss ever. And he said, so I'm going to have to send my financials to you this quarter and there's going to show a loss. What's going to happen? It's like, well, let's talk about the whole thing. And essentially what I explained to him is, his run rate, his burn rate on his cash was something like 26 months at the current amount of money he lost. Yeah. And that's what we're going to look at. He has plenty of money to sustain his business. We can do an exception to his covenant bust and move on down the road. We quickly went into a social conversation, talking about family and everything. And he hung up and said, "Thank you for talking me off the ledge. I feel way better now." Yeah. So, I get calls occasionally where people are questioning that kind of thing. It's funny.
Yeah, well, you are in a warehouse lending relationship is the most, as we said earlier, such an important relationship to any independent mortgage banker. That is certainly the case. And you and how you respond to their difficulties can end their business for them, or as you just did, make them feel much, much better. I applaud you for that, because you guys are always the ones that should be the first call. It was Lynn Merkel and Bill Ritter who had my first warehouse line, 40 some years ago, or whatever it was. And they said, Dave, the first call when there's bad news should probably be to your wife. The second call should be to your warehouse lender. Don't forget that. The only reason you bring up the first one, tell you how important the second one is. That always stuck with me, Drey. And I think a lot of people run in fear. What advice would you say to those that are feeling that fear? I mean, how would you advise them to overcome that?
Well, what we do is we want to put them through, talk about stress testing their company. What do you have? What do you not have? Let's talk about, right sizing the company. Let's talk about, having candid conversations and transparent conversations with employees, because they know what's going on. Nobody is immune, or you can't hide what's going on, and explain to them what the plan is so that you don't have everybody running scared. We want to talk to them about meeting their covenants and what we can do, and having proactive conversations with the warehouse lenders to be able to meet those covenants. I've got lines of credit that are very large right now, and they're maybe 10, 15, 25% utilization, because these larger companies, maybe a refi shop, they're not getting as much of the volume as they were getting before. So have a proactive conversation about cutting the line to.
There's the word. Yeah. You hit on the word proactive. I think the most important part of this thing is being proactive in your communication, especially with your warehouse, all your counterparties, certainly what's going on. And I think that's one of the biggest ones. And also one of the things I value is that when I was independent, I had 3 independent mortgage banking companies, was the fact that you guys were some of the best advisors I could go to. We exist as consultants, we add a value, but your first advisor should be your spouse. I think whether they know anything about mortgage lending or not, they can help you in some regards. But the second one, which is going back to one of the most important relationships you have, other than your spouse, in owning as a business owner of a mortgage banking company, is your warehouse lender. Talk about, I love stories. Give me, you talked about the guy that talked you talked him off the cliff. Any other stories where you have made that difference and in helping people navigate through times of uncertainty and giving them direction on what they should be thinking about next? And
we like to talk about navigate. Absolutely. We like to talk about what if scenarios.
Yeah.
And so there are situations where people are saying, hey, I'm going to cut every expense I possibly can. I'm going to run lean. I'm going to do, I have a client in Florida. He's like, I saw this coming. I basically shelled the company. I'll do loans if they come in, but I have eliminated all my expenses. And he is like happy as can be because he knows that this is just he's waiting on the next refi.
Yeah, it's exactly right. This is just a blip. Yeah.
But I do remember sitting at a warehouse roundtable meeting in 2019, and we had to go around the room, and everybody had to kind of project what the next year would look like. And everybody's like, "Oh, it's going to be 5.5. This is, we're going to be doing X percent of volume, less than we did last year, et cetera." I didn't know. Nobody knew that COVID was coming. Nobody knew that 2020 was going to be what it was. So, what I thought was important is we've talked to our clients about variabilizing their costs, creating relationships with third parties that can help them because, yeah, we're all thinking about volume going down right now, but what if it goes up and you don't have any staff to handle it? You don't have warehouse capacities there. You don't have the tangible net worth to get an increase on your warehouse line. So have partners out there. And a great example is there's third-party fulfillment providers or doc prep companies that can handle overflow. So you may be able to handle 50 loans a month, but if you're doing 150 loans a month, are you going to hire that staff right away? Are you going to be able to hire that staff? So have partners out there that will help you, variable cost partners out there that can help you handle the volume if it does come in. So,
which is really getting to the next point is what are some of the things you think that independent mortgage bankers need to be focusing on now? You brought up a variable cost model. That's right. Stressing that is really, really important. And anything else that you would recommend that they be focusing on right now, Drey?
Right sizing the company, reducing overhead. Like I said, pre-negotiating with your warehouse lender. Be transparent with them. Let them know what's going on. Cutting expenses that make sense. Cross-training team members. That's one of the things that I think we've done a really good job here, particularly in our operations team. Almost everybody in our operations team can do anything. We've been fortunate here. We haven't had to cut anybody. We've had natural attrition, but it's great because our client, one of our team members over there can fund loans in the morning and she can settle loans in the evening, or she can ship, or he or she can do whatever needs to be done in that department. And so if you can cross train, have conversations with your employees as well. Some people are very concerned about losing their job, but are willing to do things like go stay with that company on a part-time basis. Become very evident, there's not a lot of jobs out there if everybody's in the same boat. And so discuss some part-time options with employees that you value. Like I said, we do the what if scenarios, and those are just some of the basic things, but it's really great to have a conversation with somebody and dissect the scenario and give them a specific answer to what that problem that they have, because there's all different size clients and everybody has a different way of generating business. Everybody has a slightly different way of running their companies. And so we apply that knowledge.
I love the fact that you have all the expertise in your staff. You talked about that when we first started this conversation. A lot of depth in expertise inside of your department that helps these mortgage bankers. They need to take advantage of that. How much do you get into actually evaluating and recommending a different business strategy? You talked about the guy that was all refinanced. Do you talk throughout the market, the cycles about changing strategy or adjustment to their overall business?
Absolutely. That advice varies based on the size and the complexion of the company. You may have one company that's smaller and it's easier for them to get real nimble because they're already variabilized. But when you start talking about larger clients, there's some big conversations. Candidly, we do something called a third-party field audit for larger clients, and we actually pay for it because the advice that we get is so valuable. And I know that your company does that, David.
Yes.
And we don't know everything. We don't pretend to know everything. We've just tried to put the right people in place. And it's great to have third-party partners like yourself that can go out and say, here's some weaknesses. Examples, we'll see companies that are growing to a certain level and they're using kind of outsourced accounting. It's like, you know what, you're getting to a level now that it's time to, think about hiring a CFO. So this could be a goal for next year, is hiring a CFO. And a lot of people are like, God, I really don't want to do this audit. But by the end of it, they're like, man, I really learned some valuable information.
I think that's when we do these, and we have a team that goes out and do these warehouse reviews and operational audits. There's different names that different ones put to it, but there's almost this, we've got to look perfect when we come through the front door. And I challenge that because I think it's so important to realize this is a real opportunity to get an honest look. I think the question comes, Drey, is how do you look at these reports when they come to you? Is this a critical, and be looking with a critical eye, or an eye like you're saying you're learning about their company? But I want to dispel the theory or the fear that this is a report card. If it doesn't come in looking really, really good, we're in trouble with our warehouse lender.
We have never not approved a client based on one of those reports.
Okay, good.
Which would suggest that they're not valuable because we've never found anything, uncovered anything. But it's quite the contrary. They're very valuable because that gives us an opportunity to work together to make some slight corrections, or maybe even bigger than slight corrections, to help their company operate more efficiently, safer, sounder, whatever it may be. We can help them. We can work together with them to get to that point.
You talked earlier about that you bank a lot of companies of varying sizes. What should we know about companies, some of the larger companies? If you could just walk through in your mind how you're viewing the relationship and how you're handling the relationship differently based on size. If you could walk our listeners through that a little bit.
Absolutely. There's some larger clients that we have that, I've always said I learn more from my customers than I do from, drawing upon my own knowledge. There's always something to learn from. So some of our larger clients, we're literally learning from them, some different ways of doing business, things of that nature. But, maybe with a larger, mid-sized, larger client, they're new to hedging, for example. Okay. And so, we see them going long or short in their hedge position. And, we want to ask them why. Why are you long or why are you short? I had one guy who was almost naked in his hedge position, not buying any coverage during COVID, and made a lot of money during that time. Unfortunately, he lost a lot of money, as it came, but he'd made more than he lost, and he went in eyes wide open. That's not a client that we can necessarily do business with because we don't finance risk. We finance collateral.
That's a great statement right there. We do not finance risk. That is a great statement. Yeah.
Right. So, but with our smaller clients, I really, that's kind of where I cut my teeth in the industry. And so I've got a very, very warm and soft spot in my heart for these guys that are making the transition from broker to banker. And I get a lot of joy out of thinking about helping people, sometimes in some cases talking them into it, not necessarily talking them into it, but showing them the benefits and everything. And then giving them a step-by-step instruction on what they need to do to be able to function. First of all. Secondly, how to operate successfully. Third, what are the benefits and how do you maximize those benefits of making that transition from broker to banker and then to the next level? And watching these guys go from, I've got a guy I used to work for. He said, as a broker, sometimes as soon as they get the check from the title company, they're getting new wheels for the BMW. And he says that jokingly, but as they progress into a correspondent, they start taking their books much more seriously. They start thinking about, what is my net worth going to be? What is my liquidity going to be? How much profitability am I going to have? Am I going to be able to meet my life? Just with having to go through that exercise automatically makes them more attentive to their books. And they run a better business when they're more attentive to their books. And so these are like just some of the steps. And then it's like, hey, now that you've got the $1 million net worth, let's talk about getting your Title II and being able to originate FHA loans. Well, I don't want to hire an underwriter. Well, you don't have to. There's companies out there that you can assign your authority to, and they'll do it. It's, oh, great. And then you get a bigger piece of the pie because there's a lot of margin there. They can do things to help clients in different ways by having that additional margin. And that's the next step. It's like, okay, let's talk about hedging. Let me get you with our client services manager who's an expert at hedging, and he can help you. Let me refer you to a good partner, one of the good hedge advisory firms. Let me help you make connections with broker dealers, et cetera. And so there's just all these steps these guys take, and we can kind of just point them in the right direction or point them away from some directions that haven't been as successful.
That's really good. Drey, we're seeing an increase in the number of new companies coming into the industry, some de novos, and we're also seeing a number of originators are saying, this has been a rough ride with the company I've been working for. I want to go out on my own. And we looked at some of the bigger mortgage companies today. They started out as loan originators, become brokers, and then went through the merging broker to banker transition. We're seeing a trend that more of that is happening again, which is almost signaling the end of a cycle and entering into a new cycle. What are you seeing as far as this trend? Are you seeing more companies doing this, going from broker to banker or getting into it as a de novo?
We are actually, we've seen a big uptick in applications, which you'd think we wouldn't be doing any applications right now.
Right.
But I think we've trained 10 new clients in the last month. I know at last count, a couple of clients trainings ago, it was like 7 clients we had trained. I think we trained at least 3 other new ones. So I'm thinking it's right around 10.
Wow.
But they are clients that work for maybe larger companies. And the challenge that the larger companies have right now is the margin compressions. There's just not enough. There's not the 4 or 5 points out there, 6 points we were seeing in 2020. And so you may be looking at 2 points of margin. And so the company that is taking all that risk, that larger company, they have to get they have to get a share of it. They have to have a risk holdback. You have branch managers. You have a lot of layers within that larger company. And so ultimately right now, the originators are seeing a smaller piece to the point where they may have to charge the borrower points in order to even do the loan. And so next thing you know, they're talking to.
What is the entry level point for someone that's coming in that you'll work with? And then also talk about the process that you will do. What is the extent that you will help them through that transition?
Our minimum net worth is $150,000.
Okay.
Wow,
that's pretty old. Yeah, you have
there's
the
a lot
control.
of belts and suspenders on those guys. Those guys, they are using they're using the investor for underwriting. They're using a third party for fulfillment, for docs, closing, shipping, and funding. We're funding to the title company. There's a lot of belts and suspenders that put us in a situation we're not taking a lot of risk. But it's really important for us to help them make that transition because these are tadpoles that are going to turn into frogs that could turn into bullfrogs. And we want to help them do that. But that's the kind of minimum net worth. There are companies that will do it for less. Happy to take a phone call and help anybody kind of because I will guide people even at my own expense. Anyway, fast forward. So that's the first piece of the puzzle. At that point, there's going to be some other things that need to be done. They need to get E&O and Fidelity, which is going to cost them about $2,500 a year, but protect them for loans that are sitting on the line. They're going to need to, create investor relationships. So the investor relationships will have a minimum net worth as well, which typically are in line with what we're talking about. Some of them a little bit higher bogeys, but we've put our client services manager basically will train every client that comes in and teach them just about everything they want to know. And additionally, these other parties, like the doc prep companies that are doing the fulfillment, they've got plenty of training and they've got extra time on their hands right now to do training. Yes, so there's a lot of resources in the industry that will help these guys make that transition and get to where they need to be. And if they don't like it, they can. I always encourage people, put your foot in the water.
Yeah.
Get a line of credit, put your foot in the water. There's minimal cost to doing it. If you like it, grow it. If you don't like it, shell it.
Sell it. Go back to doing what you're doing and have nothing ventured, nothing gained. Talk a little bit about what you see as when someone is ready. What's the right type of, I'm trying to say, attitude, framework, mindset? What is the construct that someone should have if they're making the decision to move from a loan originator to opening up their mortgage company versus someone who is probably not well suited? Is there some general guidelines you can give us, Drey?
It's people that are experts at originating loans. They do very well at it. They want to take the best care of their clients. They want to give white glove service to their clients. And they're willing to put a little bit extra work in to do that. And they're willing to kind of jump over a few more hurdles. But ultimately, the thingy about making the transition from broker to banker is that there's about 7 or 8 touch points on a broker loan for the mortgage company that you're dealing with. you have disclosures, you have appraisal, you have a compensation model, you have change of circumstance, underwriting, locking, and then closing of the loan. So there's a lot of touch points. With that transition to correspondent, you can actually say, I'm going to look at an investor that has great pricing and good underwriting, that can get my loan underwritten proficiently. And then I'm going to a la carte the rest of the stuff out. I'm going to do my own disclosures, or I'll use a third party for it. I'm going to get to pick the appraisal management company that I want to use. There's a local appraisal management company right here that does an excellent job. I get to use them instead of some national conglomerate.
Right.
I'll do my own change of circumstances. Still going to use the investor for underwriting. Still going to use them for the lock. I still am going to use them to purchase the loan off the market. But I get to pick my own closing team, whether I do it, the investor does it, or a third-party fulfillment company does it. And so it turns that whole process into kind of an a la carte process where you get to pick the best of the best. And that is the person that wants to make that transition, and that disposition of that person is somebody that said, hey, I want to grow my business, and I want to create a better experience for my client. We have so many things right now that can hold us back. One of them is social media. Mm-hmm. So if we give our clients a bad experience, social media is going to brutalize us, right? If we give them a good experience, it can be our friend. And that's that mentality, I think.
There's so many aspects of what we're talking about here, someone making that decision. And it really starts with a conversation. How can people get a hold of you, Drey, and your team, and who should they be calling? And what's the best way for them to connect?
So I have got there's four of us that handle the sales side. I've got myself as the national sales manager. I've got Jim Harrison, who's kind of my right-hand man. He and I work together. I've got Steve Harris.
Oh, yeah, Steve.
And then I've got Alex Gauss. He's new with us, and he's a brilliant young man who's learning everything quickly. But if anybody, there's always LinkedIn. I can send you a link to everybody's contact information.
We'll put it in the show notes.
Yeah, that'd be great if you put it in the show notes. But yeah, this whole team will take care of you, and the people that support those folks will take care of you as well. Take care of these guys as well, guys and gals. Thank you.
Very exciting. Well, thank you so much for taking so much time. It was just great to have a conversation with you about this. There's so much that I want our listeners to learn about warehouse lending. Folks, your warehouse lender should be your best friend outside your spouse. The warehouse lender should be your best friend and best advisor. Encourage you to get a hold of Drey and this excellent company, Independent Bank of Texas. And I am excited and thrilled to have the relationship we do with you, Drey, and your team.
Absolutely.
Thank you.
And by the same token, I would encourage people that are growing their business, you get to a certain level, to look at your company, Transformative Mortgage Solutions. I think it's an investment in your company going from being good to being great. So
thank you. Yeah, we enjoy doing it. It's a passion to help this industry and give back for all the years we've been doing it. But thank you for what you're doing, Drey. Great to be here with you. Thank you.
Same here. Thank you.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host, David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.